Hello everyone, welcome to ElliottWave-Forecast.com YouTube channel. This is Henry and today is Wednesday, March the 3rd. The time is around 3 a.m. GMT. So today we are going to take a look at the chart of pound sterling, cable, pound dollars, right? GBPUSD. And this is a 60 minutes chart here. Now we can see right here, last week the pair continues to rally tremendously, topping out at 142.43. We labeled that peak over there as a W. All right. Now the fact that we label it as a W means you will eventually see more upside, right? Because it is a W. So this means this current sell-off is with X, which is not really a new bearish cycle or anything, right? It's just a pullback basically, right? So if you are someone that follow the trend, then you want to always follow the higher degree trend and not trying to trade every single swing. So it really depends on what kind of trader you are. And EWF, mostly we are trend traders, right? We don't like trading the counter trend, right? And we would rather patiently wait and we take one side usually, right? So here we can see the sell-off here. Now, this sell-off here, it looks like a clear 5 ways down, 1, 2, 3, with an extension in the wave 3, right? If you measure using the Fibonacci extension here, this is 1.618, which is typically indication of a wave 3. And then you got a 4 and a 5. It's a clear 5 ways down with extension in the wave 3 and also momentum in the wave 5 has a divergence, which is typical in a 5 waves move with 5 legs momentum, right? So you got a 1, 2, 3, 4, 5, and it looks to be ending here. And now we should be correcting this 5 ways down, right, into 3 waves. And as long as this rally here fails below 142.39, then we could be looking for another leg lower. So basically what we're trying to do here is simply just doing an ABC zigzag correction 535 before we end this entire rally into wave X. Into wave W, all right? So here, just to give you an idea of the 4-hour chart, right? So simply, without having to know all the labels, like if you want to know the full labels in different time frame, of course you can check our service. We have 14 days free trial. This last peak here is with W according to the 1-hour chart, and this 5 ways down is the first leg of a zigzag correction with A. Now you notice here, if this is truly 5 waves, which it looks like, one of the things about 5 waves that most of the if you are new to Elliott Wave or if you just recently learned about Elliott Wave, people always think that when they see a 5 waves, you definitely will have another one, right? Because they just learn the basic, 5 waves theory, 5 waves move. If it is 5 waves, it is motive, it is trend, therefore you will get another follow-up and so on. But the thing is, a lot of times when you have a 5 waves like this, right, what you want to check to see is whether these 5 waves can be counted as a wave C of an expanded flat or a flat. So now if you are not familiar of an expanded flat, then you do have to learn again. But expanded flat looks like this, in which case you label this an A, right? So let's use this degree here, A, B, C. So you have a marginal high, and then you sell off again and creates an ABC expanded flat. So this is a 3-3-5 structure. This subdivision here is in 3 waves, this is in 3 waves, and this one is in a 5 waves. So when you see a 5 waves down, it is not automatically, it is not as easy as, okay, well, it has to have more downside. So first thing you need to check usually is, okay, this 5 waves down here, can it somehow be part of a wave C of a flat? Because you notice here, expanded flat is a correction. So if, let's say if the trend is bullish and then it does this flat, so this, for example, could be with 1, and then you have a correction with 2 as an expanded flat like this. And then if that's the case, even though you got a 5 waves down here, you can always rally to new high again. Now this one is just something else completely different. Just want to point out, just because we have a 5 waves doesn't guarantee it always has more downside. Depends. This 5 waves, is it part of a wave C of a flat, or is it not? Now in this case though, if this is truly 5 waves, honestly I do not see how we can call this as a wave C of a flat. There is no prior peak before this peak that reasonably can be used as a starting point of an expanded flat, right? So therefore, if this is truly 5 waves, we can conclude, we can eliminate this possibility this is a flat of any kind, like a wave C of a flat. So then we are going to be left out with a pretty smaller probability that this is, if this is truly 5 waves, which looks like it is, we should be getting another leg lower, because it's not a wave C of a flat, right? It is not a wave C of a flat, so we need to get another leg lower at least to complete an ABC zigzag, right? So therefore, as long as this bounce here fails below 142.39, we can see further downside. Now, some people also literally interpret this to be exactly forecasting where the level is going to end in this rally. It is not. This is just to show you a possible swing. This is going to be correcting in 3 waves. I think the most important takeaway when you see charts like this is not that, okay, it's going to exactly go to 140 and then pull back exactly to 139 and then move high exactly to 140.60 and then sell off again. You shouldn't interpret it that way. What you should be interpreting here is, okay, we got a 5 waves down and it's not a wave C of a flat, and therefore as long as this current rally fails below 142.39, we could see another leg lower eventually in a C leg. Now if you want to be precise with this short-term structure, there's no way we can be precise. There's too many different variations that can happen in this movement here, right? So for example, we could have ended W here as an ABC, and then you can sell off, right? You can sell off as an X, and then you can go up again, right? You can go up again in a Y, right? It can be doing a W or an A, and then this is an X or a B, and then go up again. So there's too many different ways when we are looking at the shorter cycle that this can play out, but all of them has the same conclusion. And the conclusion is simple. As long as this current rally fails below 142.39, we can see another leg lower to finish A, B, C zigzag, right? Now, you can also always use retracement. Typically, when you are correcting a cycle like this, it can go to, let's say, 50%, but it's not always. It can sometimes be lower than 50% and so on. So that's the bottom line, is as long as we stay below 142.39 in this current rally, we can turn lower again to complete an ABC zigzag correction from this 142.39. All right. So for further updates, of course, you can check our update. We update 1 hour chart 4 times a day for the gold plan member. And I'm going to provide the link to the trial in the description of the video. I'll see you all again next time, and have a nice day, everyone.